Hello traders, Gary Wagner with the gold forecast here, the 15th day of June. It is Wednesday, approximately 8:15 in Honolulu, Hawaii, and this is the daily report. Gold is trading higher after a fairly volatile trading day in which we saw it lower about $10 and higher by about $5 to $6. Incredible day. I'm going to go ahead and blow this chart up for us so we can take a look at it. This is our daily chart. It is in candlestick format. And what you can see from this chart, of course, we did issue a buy signal yesterday. It was based upon a couple of factors, and I'm going to go through them quickly. This is going to be a much shortened edition of the gold forecast because we will have a webinar to follow. The link is on the email that you guys have gotten. So please join me at 10:15 Eastern Standard Time. And there I'm going to be going through some of my theories as well as answering any questions and giving you our outlook. One thing that you do want to realize is that we did see this piercing line. And this piercing line that I'm talking about, it's a 2-day pattern. It's right in here. It's followed by confirmation, which is a large white candle. We're not really getting that. We're getting this doji type candle. We did have a pretty hefty round of profit taking in here. But that was the first signal that kind of caught our attention. The second thing that we looked at, and we talked about this yesterday also, is we did a simple Fibonacci retracement. And we did the retracement. That was simply based upon this last move up here. We get our move down here. And then, so what we're seeing in terms of, this is what we're calling 2 of our minor, and then 1 of our minors right here, and then the beginning of 3. When we did our Fibonacci retracement, what we saw was that this 38% level, which is a typical retracement level for a corrective wave after an impulse, it can be anywhere between 38 and 50. And you can see it falls right within that guidelines, the piercing line showing us support. So that was the second thing. And of course, the third thing was the fact that we're doing our Elliott wave count, and we are looking for that 38%. So those were the factors that precipitated the actual buy signal itself. Of course, what we were simply looking to do was to weather this corrective wave 2 before re-entering for 3. And now comes some of the fun stuff. And what do I mean by the fun stuff? Well, to me, the forward forecasting is one of the favorite things that we like to do, obviously, because it is such a beautiful thing in terms of giving us the ability to get a handle on price. And so all I'm doing right now is I'm going to make a line, and this line, let's make it more realistic. This line is simply from the low here to the high of this impulse wave. And then all I'm going to do, of course, is carry it forward to the low. We'll have to move that over a little bit to be able to do that. And to give us an idea, now, what we are saying is this. According to Elliott wave, the belief is that you have 3 primary rules, one of which states that impulse wave 3 cannot be the shortest of any of the 3 impulse waves. So you've got 1, 2, and 3. It can be equal to 1, but it can't be smaller. So therefore, according to basic Elliott wave theory, if we were to take a look at where this takes us, and the line's not really straight, but as you can see, it takes us roughly to just shy of $1,600 on this impulse impulse wave, is a logical progression if in fact it follows suit. So therefore I think that we might have a decent trade on our hands. Now this, of course, this wave is going to then be subdivided into yet another smaller set. You can always go ahead and you can continually look into the wave or out of the wave to go from minor to intermediate or intermediate to minor. So I think it's a quite interesting strategy itself. So that's kind of what we're looking at. We'll talk in much more detail at the webinar. Hope you join me there. This has been Gary Wagner wishing you, as always, good trading, and we will talk to you tomorrow for another daily review, and we'll talk to you at the webinar if you can join us in just a couple hours. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be that it's strange